We talk a lot on this podcast about earning the money, but today we're going to talk about what you do with that money. We have Brian Hoffman, investment and commercial real estate advisor, going to talk us through the process. Hi, welcome back to Blunt Force Business. I'm Brian Fauci.
And I'm Patrick Marino.
And today we're going to talk about investment advice for your business. And we have with us Brian Hoffman. Welcome, Brian.
Thank you.
Thanks for joining us today.
Absolutely.
Brian, why don't you introduce yourself to the group?
Yeah, thank you. I'm a financial advisor with Gora Financial Group based in Providence, and I am a commercial real estate advisor with eXp Commercial.
That's a lot of things.
Thank you.
Names. Names that I'm not going to remember. You know what name I will remember?
Brian
Hoffman.
Like
Because
it.
it's a movie star name. We can all agree that if you saw it at the bottom of a screen, you'd be like, Brian Hoffman's in that movie.
Been called
Crashing
worse.
cars, jumping off buildings, doing crazy shit. We talk a lot in this podcast, Patrick. I've lost Patrick already. We talk a lot on this podcast about earning money, right? We focus a lot on your business and how you can earn money. Today, we are going to level up like Super Mario Brothers, and we are going to talk about what do you do with that money so that the money that you earn and your business earn works for you a little better, and how to leverage financial tactics to help things like employee retention and all fun stuff like that. So let's get us going. I think we want three things, right? I think for our audience, it's good that we can kind of compartmentalize this and bucket it a little bit. So why don't you start us off? Give us like the three main things that we're going to kind of hit on today.
Sure.
And then we'll kind of dig into them and go down the list.
Yeah, I think the biggest thing to start is that, people have a great idea. They want to start a business, and it sort of just goes from there, and there's no more thought put into it. I think you've got to have a team of trusted advisors. That should include a financial advisor. It should include an accountant. You've got to have a good payroll person. You got to have insurance specialists because there's often, business overhead, workman's comp, things like that. But you got to have a team of people that you can rely on to help get your jobs that you don't want to do done, so you can focus on the thing that you're really good at. You've got to be able to. How many people know how to mitigate their taxes properly without an accountant? It's not stuff that's secondhand for most people. So you really got to have that sort of cabinet of people that you can trust and lean on so that you can put all your focus into what's going to make your business grow.
Awesome. And why don't you take us down the list of the other two, and then we'll kind of dig into them in the conversation. So what are the other two main things that you'd like our listeners to get out of today?
Yeah, I think you've got to set up a retirement plan. You've got to be thinking long term from day one. I just know that a lot of people just get into opening a business and there's no more thought as far as anything beyond, let me get through day one. I want to get to day two, get through day two. If you don't have a retirement plan in place, you're just not doing yourself any justice. You've really got to get that in place. That's where an advisor can help guide you on what the proper plan will be. We can talk more about it in depth, but I think number three, which may seem strange because you're just starting a business, is have an exit strategy. You've got to know what you're going to do. Is this a 10-year plan? Is it a 2-year plan? Do you plan on opening multiple locations? Do you plan on selling your business at some point? Is there legacy planning involved? I think those are kind of the three. Have a team of trusted advisors, retirement plan, and an exit strategy.
I feel like as he's going,
I don't have any of those things.
As he's going, this is going to be beneficial across the board. We have internal and
That's
external.
what I'm here for.
Really good at marketing.
We're internal and external benefits
really good
to today's podcast. Let's start at the beginning because that's a good place to start. One of the things that resonated with me when you were talking about that, Patrick and I do focus a lot on building the strength of your team from the beginning.
Yeah.
Right. So and everyone does that. I think you start business.
Well,
planning.
I think we've actually come out of a lot of different ways. I mean, I'm usually you're more of the build the team out, and I'm the bootstrap, right? I'm the let's stay lean and mean as often as possible until we can start, put all the money back into the business. It's kind of the way that him and I kind of work off each other. I think that's probably fair, right?
Yeah, but I think we both acknowledge that these key components are like components that you want to be thinking about, right?
Well, you need to be thinking.
Yes.
which is something that we both definitely say.
Yes.
Not necessarily do, but say.
You're halfway
be
there.
intentional.
It's halfway there.
Be intentional. Be intentional and put it all into a plan versus just going.
Right. And you can say that, but where I'll play devil's advocate is we do that very well in the way that you and I work together from a strength-based standpoint. There are certain pieces of all the components of blunt force business that have, as we've kind of worked it out and melded, that's what I like about multiple people in a company is that it does give you the ability to say, all right, where are you good, right? So when our listeners watch the video, that's all Patrick, right? So that's his space. He's good at it. The reason you like it is because he's good at it. And then when we get into some of the planning for our weekly call that we have, I take on that responsibility because it fits a little more my skill set of the laying out the operational plan, whatever. So I think we do it. We do it pretty well. But to Brian's point, I think one of the things that most people who do start their company don't put on their team, like they'll think about, all right, yeah, I got that. I got the accountant. They'll think about that guy.
Yeah.
And they'll think about, all right, am I going to do the marketing or am I going to hire Patrick's team to do the marketing? And
probably admin, right?
They'll think about those things.
I think these are the things people think about. And the other thing that really resonates is because, like, what happens when you start negotiating a W-2 job? What's one of the first things you ask about?
Benefits.
Yeah.
Benefits.
What's one of the number one benefits?
Retirement,
right? And so, like, but you're starting your own company. You're not having that same conversation.
Right.
Yep.
I get the whole point here is I think what we're leaving out and where we're failing across the board, I believe I failed at this, and I want our listeners to not fail at this, is that role should be involved from day one because we say this all the time, what's the difference between a hobby and a business? It's money.
And without trampling on the way that this conversation goes, I think probably the hardest part for a business owner, because if you're walking into a W-2 where you're working for a company that's established, they've got benefits people within the organization somewhere who've done all this work. They figured out, okay, what retirement plans do we need to be in? What do we need to be a part of? What kind of matches do we have? All the things that you would consider when you're going for a W-2. As a business owner, you probably don't start off with that knowledge.
Yeah.
Right.
I mean, most people don't know how to set those things up.
Exactly. Right. So I think that's where this conversation is going to come in and be able to say, like, where do you even start as a business owner? Because if you're just starting off by yourself, you probably don't have an HR/benefits person with you right away. You know what I mean? But if you have someone like Brian, financial advisor, then at least you give you a chance to start.
How do you get people in the door? I imagine two things, and that people probably think or say that you dispel for them. Thing number one is that, well, I'm just starting. I'm not even thinking about investing yet. Right. And thing number two is I'm just starting. My financials don't look great right now, and I'm embarrassed to come in front of you because you must deal with multimillionaires all the time. And you're going to look at me
exclusively.
And think, right. So talk us through that, because I do think those are barriers that we need people to get over to get in front of you or get in front of anyone that they can help them with this. So.
Well, I think one thing we got to do too, as someone starting a business or even someone who's already been running a business, you've got to keep business and personal finances separate. That's one of the first things you've got to do, because commingling those things can really become a nightmare. You've got to set budgets, but then, finding a financial advisor, it doesn't mean not all of us have upfront planning fees. There's a whole bunch of different types of advisors out there. I pride myself on having a great network of people to then, if someone were to come to me and say, hey, I've got this idea, I'm going to open this business, I need your help, I'd be able to say, great, I've got an accountant for you. I've got a property and casualty insurance person for you. I've got an incredible payroll person that's going to help you with learning about tax credits you didn't even know were available. That's all stuff that I feel is my obligation to bring to the table and just adds value. So it's almost a matter of finding one or two of those people in that trusted advisor space first, and then they should be good at helping you build your network of people you can lean on. It just shouldn't be a one man or one woman game. It's you've got to have help. because you guys both have your own strengths and weaknesses. So you've got a partnership that works because you're both using your strengths, right?
Right. And I think, we value the fact that there's other professional skill sets out there like you that add a huge amount of value to what the end game is. And the end game is, it's always about remembering that the end game is financial. So what do you say when someone says, that's all well and good, but I'm not in a position to pay someone to do my to do bookkeeping right now, or I'm not in a position to
I think that's the question.
Yeah,
that's it, right? I mean, the question is, I'm barely making any money right now.
Yep.
There's barely any money coming in, so it's got to be just me. So where do I start?
I think helping someone set budgets is probably the first place to start there, and just having someone to sit down with and just go over, all right, what are cash flows? What are they expected to be? And you can often find little ways of savings and things like that. And listen, maybe from day one you don't have all those pieces in place, but you should be thinking about it. That's kind of the key thing here. I think we want people to take away is you can't go into just saying, all right, this is going to be a solo operation and I'm going to open a store tomorrow and not have any plan in place. That's the biggest thing.
I think there are a lot of types of businesses, like the things that we talked about in the past, where it's like the example you bring up all the time, the detailer. I'm going to start a car detailing business, or I'm going to start a personal training business, right? A lot of these where you are basically just kind of on your own at the start.
In an existing space that's already...
Yeah, exactly. Yeah.
You're probably paying a rent, but...
I think the majority of people who kind of start their own business are probably in that space.
Yeah.
What I mean? Are really solo, I'm going to provide a service.
Yep.
And then they're not thinking about beyond that, which we've talked about you shouldn't do, but that person probably needs more help than anybody, because a lot of those businesses don't end up being long term because it's just really hard to scale those businesses, right? So they're not really thinking about that. So I guess go back to it. How do we start? What are we telling people to do right now? Just Google financial advisor? I mean, what's the...
Listen, I think most of my business is now coming from personal introductions and referrals. So I think even if you don't know a financial advisor, it's talk to people you do know and trust that can point you to one. I think that's better than just doing a Google search. But listen, if you don't have any options,
that's what I'm saying.
Yeah,
most of these, the car dealer, for example, detailer.
Talk to other
a lot of kids, a lot of younger people,
who
are just starting out. We're just starting the business. They've got a business idea. It's hey, I don't want to work for the man. How do you start? Where do you go? I guess just speaking to mom and dad, people
Yeah, it's really, I think that's the best way to do it, is just to lean on people you do know and trust. They can probably point you in the direction of someone. And just getting that ball rolling is better than nothing.
Is everybody who's starting this process starting with $1 million?
I wish. Don't we all? No, of course not.
So this is a process that if you started with a very low entry point, hey, all I want to do is start $100 a month in managing that for these future things you talked about, that there's a lane there for that.
Yeah, for everything. There is.
And I think that's the fear people have. Maybe I'm projecting right now. Why I waited to get into that, to go that route and bring someone on board, which we do have now, is because I was like, no, they're not going to care about me. They're managing, because they always talk about it. That's the thing, right? People in your industry talk about the high level numbers because they do it as a way to justify the fact that they're good, right? Sure. So they do that, and they by doing that, I manage a $100 million book of business, and I because now what is that? I get it, because what you're saying is people with good financial acumen trust me. Yeah. That's the message. But then the people who are just starting to get into that game look at it well, why are they going to care? Yeah. And there are some financial advisors out there, and this, that will only entertain you coming on board with a minimum amount.
Sure.
That exists.
Plenty of them, yeah.
But you'd be doing a disservice to not start engaging in the process with the many of them out there who don't have that.
Right.
To start moving the needle on that. And I want to just add one more point to that, and then I want to get to some of these others. But to me, it's a financial plan action too. So in two ways. One, through the conversation, you can start saying, all right, these are the people that as this business grows, it's going to be a benefit for them to be involved. You know, the financial advisor, maybe a bookkeeper, like all these people that are going to help with the money. Okay. Maybe we're not ready for them now, but if we build them into our financial plan, then we have that bit. And also from a revenue standpoint, if we carve out 10% of revenue is going to go to future planning. Now we've built the structure of that into our business plan.
Yeah.
So now we're set up to move in that direction, as opposed to, oh yeah, that's right. Because listen, I've probably looked at thousands of business plans, and I can tell you a handful of them had in there that piece of revenue is going to get like a line item where we're going to carve that out for like
anything. Yeah,
nobody puts it in there.
Right.
Nobody puts it in there. And there's a benefit to doing that, because now okay, to actually look to try to improve future growth, if I carve this out, this is what I need to make to be able to carve that out.
Right.
So now your target is aimed at that.
Yeah.
And if we don't put a target on something, we don't hit it.
Yeah.
So let's dig into some of the other benefits here. I think we've kind of talked through that well, and hopefully our listeners are comfortable with knowing, like, hey, this is something that's worth having a free conversation.
Sure.
and
that's where it should start.
Yes.
But then, step 2 is really just getting a retirement plan in place. I think this is the easiest. Not everybody needs a 401k. Mm-hmm. If you are a single individual, you've only got a couple of employees, you don't know what your revenues are going to be, you don't know if you're going to have any revenue, a 401k is a really big, expensive step. Mm-hmm. There are much less expensive and easier options to go through. So that's where a simple IRA might be the right move. A SEP could be the right fit.
What's a SEP? Are you using acronyms on our Blunt Force Business channel? We don't do that.
We don't do jargon.
This is your one warning, Brian.
A simplified employee pension plan. So it's it's going to be closer to a 401k than a simple IRA would be.
Okay.
They all have different limits for how much you can contribute. So as a business owner, you can contribute up to like $65,000 a year pre-tax if you've got a 401k and you're the owner of the business.
Yeah.
Now, if you're thinking I might make 50 grand this year if I'm lucky, why do you need something with that much? That doesn't make any sense to me. A simple IRA, you've got a limit of $15,500 a year. That might be completely and totally fine. You can have up to 100 employees on a simple.
And that's cheaper to set up and operate.
It's about $20 a year per person compared to a $900 startup fee for a 401k. And then you've got to do maintenance. There's IRS testing limits for 401ks. 401k is a public document.
Yeah.
That's something you and I can go look up, any business that has a 401k.
But if you ask a business owner or an employee, like you mentioned, what are the words that are going to come out of their mouth?
Well, they'll say 401k, but they don't know that there are other
I know
options.
that, but that's my point. They'll say that. And so if I'm the business owner and this world is not really something, and I know all the SEP and I just did it. I used the acronym. All the
Nice.
acronym space. Go ahead.
No, I was.
You were going to make fun of me. No. If I don't know all the acronym space, I immediately think, 401k, that's expensive. So the conversation allows you to future plan for what am I going to do for my employees that will fit into, or myself or my employees. Because this is a big retention piece, like you said.
And does this scale? So in other words, if you're starting off with one of these simpler plans, would you suggest that as they go down the line that they scale into having a 401k?
So a simple can be rolled into a 401k. You get to a point where, let's say you've now exceeded 100 employees, you will need to do that. But let's just say you're now making a ton of income.
I would say that most of our businesses that we would be dealing with wouldn't be at 100 employees.
Right, that's a lot of employees. But
right.
let's say
we're at 20, and let's say that's going to be pretty much where we're maxed out for years.
But you're doing great now as the business owner, or your employees are doing great. You want to offer more benefits. You can turn that simple into a 401k.
Right.
And that might be more attractive to you as the business owner on a pre-tax basis of being able to get yourself some, reduce your tax bill.
Right.
So it's for dual purpose. You're also putting aside money for retirement, which is the key of this.
And just for the scaling, for the person who's like a real noob at this, right? So you're starting at this. Why would you?
That's an acronym.
A noob? What's it stand for?
I don't know. I just hear like the kids on the video games use it.
But the idea being like, okay, so we're starting off at something simpler. what are the benefits even, again, for somebody who's out there, right? The business owners have no idea. Everyone's heard of a 401k.
Yes.
Right.
Yes.
And there's a lot of people who do, like I have a few friends who are right on top of all that shit.
Yep.
But they're employees.
Yeah.
They are not employers.
Right.
Right. The employer is usually, again, like not as focused on that stuff because they're so focused on the business. So maybe just go back to the basics. Like, what is the advantage of a 401k in the long term versus just sticking with one of these smaller, simpler
It's different for
options?
everybody. And
And that's
and
where
there's-
you could speak through that just a little bit so we have an idea.
Well, it's
That'd
like,
be awesome.
I think if you're a small business, a simple IRA might be totally sufficient. You still do a company match. You can still do all the things that you can do with the 401k. You just can't put as much money into it on an annual basis.
Right.
So that's really the biggie. So no, if you've got employees that are making $250,000 a year, a simple IRA might not be enough for them on a pre-tax basis. They might be saying, "Hey, I want to be able to put more away," and that's when you just those are great problems to have. You then make it a 401k.
Got it. What was the other one? The SERP? The
SEP.
The SEP?
SEP is going to be a little more akin to a 401k with the amount you can put into it. It's also we're not going to go into the weeds. There's
Well, what's the advantage of doing that versus the 401k in a nutshell? Like, what give me like?
a SEP is great if you are a high earner and you don't really have employees. There's like a forced amount you have to do the contributions as opposed to the employer the employee putting the money in.
Mm-hmm.
So you have to put in the money as the employer for the employee, which a lot of people don't always want to do. But let's say you're doing great. I've got a friend who's in book publishing, makes an awful lot of money, does a SEP because she doesn't have employees that are anything other than 1099.
Got it. That makes sense.
Yeah.
Perfect. Thank
So
you.
high earner wants to put a bunch in, doesn't need the complexity of a solo 401k and or the cost of it. So it's sort of almost like a middle road between those other two.
Awesome.
I think what I'm getting out of this conversation very, very
Hire a
clearly.
financial advisor.
Yeah, I mean, because the other thing you mentioned in Pat, and you just skimmed over it, but when you think about what something quote unquote costs, well, when there's tax obligations at the end of the year, if we're offsetting some of them, then the real cost of it is negligible a lot of times. It's like
Sure.
pennies on the dollar.
Yeah.
For what you're now doing, that you can then not have to pay at the end of the year a tax on the income you would have to pay.
Right.
I mean, it's one of those things where I could pay myself more money,
Yep.
right?
Yeah.
But I'm going to get taxed on that.
Yeah.
I could pay myself more money. That puts me in a different tax bracket.
Sure.
Right? So
It can lower your tax bracket,
Yeah.
but it's also it's earmarking money for retirement
Yeah.
that you cannot touch without penalty until age 59 and a half or older.
Mm-hmm.
That's important. It's important to have that bucket that is set aside that you go, I can theoretically access it, but if I do, I'm going to get dinged.
one of the things along the line, what we're talking about, that my accountant, my financial advisor, we're working with, and that's the thing too. Like those people are usually two separate people, but having them talk together once twice a year
That's great.
yeah,
I would encourage
really
them to be
important.
separate people, but yeah, if they can talk, that's huge.
So I try to make that happen.
Hugely
I'll
helpful.
usually let my accountant like your accountant's always like more scheduled. I feel my financial advisor has a little more flexibility in schedule. That's what I find. Maybe I'm wrong. Maybe that you don't see that in the industry. That's my situation.
Sure.
So I'll try to get them to schedule around that. Like I got an accountant appointment.
Well, they've got a couple times a year as accountants that they're
Right. I guess that's what I'm getting
yeah.
at. During those times.
Yeah.
So I'll say, hey, can you just be available by phone for like 30 minutes
Sure.
during this time so we can call you?
Yep.
But one of the things that came out of that meeting this year, which was really insightful for me that I didn't know, was I was looking at what I was going to pay myself on W-2.
Yep.
And I was looking at it from a number of different reasons, from like, all right, qualifying for loan.
Yep.
Right. So taxes. And my accountant kind of clued me into a really unique strategy to save money and to get the most out of my money, which was the Social Security stuff. We laugh about Social Security a lot because, Social Security. But there's like a magic space where if you're paying into it with a salary, and at a certain point if you go over that, it's like $67,000. So everything you pay yourself W-2 above and beyond that, your return per dollar you put into Social Security gets lessened, right?
Okay. Yep.
So at a lower income bracket, every dollar you put into Social Security comes back to you maybe at 10%. And then as you go up, every dollar you put in comes back to you because you're contributing more, but you're not going to get equally more.
Yep.
So that conversation it's very similar to this in that having that team you're talking about led to my accountant and my financial advisor just saying, well, just pay yourself that and then bonus yourself the difference because that won't hit then you're still you're going to get the same amount, but now you're maximizing your dollar in, dollar out on the Social Security piece.
Imagine the variable that gets to the point where there's no tax on tips. You can just give yourself some tips.
Exactly.
Give yourself some tips out of the company.
Yeah.
The only other thing with that is depending on, because I've seen some people that are realistically making $500,000 a year, but on paper they make $50,000 a year.
Right, exactly.
And then they want to set up a retirement plan, and I'm like, well, you can't put in more than a really small amount.
Yep.
Because you can't do the tax, so it's the catch-22, and you've got to figure that out with people.
Well, can we talk to that for a second?
Yeah.
It's like, what if you're the person who's making $500,000 a year, but on paper you're only making 50?
Right.
Would you suggest to that person that they take that excess money and try and do, I think, what you were just hinting at, which is bump their income up so they can do more of this retirement stuff, or are they better off with some other type of investment?
And it's different for every person.
Yeah.
I mean, it's completely different for everybody. I mean, everyone's got different needs.
Right.
Everyone's got different, everyone also has different ideas of how and when they want to be taxed. That's also a biggie. Like, do you want to pay your taxes now and just be done with it? Or do you want to get taxed later? That's a big discussion we always have.
Yeah.
Tax now, tax later, tax never.
I love this.
Can we get on the tax never plan?
Yeah, I like tax
Everybody
never
always
plan.
opts for that
I like
one. They
that
realize
too.
that's challenging.
What I really love about this conversation is what you just brought up is perfect because that's the biggest advice I could say we can give to our listeners is you need these people having these discussions now because your needs will change year to year. So some years, if I know that I have something coming up where I'm going to want to be able to go to a bank for lending purposes, then in some years, I actually look to bring up my W-2 income.
Yeah.
And I'll do that for a year. But that conversation came in the meeting with the accountant and the investment guy saying, all right, let me tell you what my goal is. What do I do to get there? And that's when they're like, do this, this. Then I get that, right? So then I get to the point where got the equity loan, perfect. Now this is my goal for next year. And they're like, okay, lower your income now, right? You're comfortable where you are. You got that loan you wanted. Do you see yourself applying for another? No, not in the next year. All right, so let's do this now, right? And so it's not we just do the same thing forever.
Right.
And you know what I love is I love that I don't have to fucking figure it out.
Well,
I don't
your,
like all
your
I gotta do
advisor
is tell,
should be in touch with you frequently. Like
all
if
I gotta do is
invest,
say, well, this is what I want to do.
If I have money invested with a client, they will hear from me once a quarter.
Yeah.
Like without fail, they will hear from me every quarter.
Yeah.
If it's something smaller, maybe that we're doing just some could be life insurance, could be disability insurance. You're still going to hear from me at least once a year.
Yeah.
But it's at a bare minimum, you should be hearing from these people with regularity, or maybe that's not the right fit for you.
Right.
How hard is it to fire a financial advisor that you feel like you're not getting that value out of?
I don't know. It's never happened to me. I'm just kidding. It's easy.
Right.
You're not normally signing a contract in any way, shape, or form. Some people will if you have an upfront planning fee, but that's whatever you've already paid it each year. This is like, you're in an at-will situation.
Yeah.
You want to work with someone else,
It's
you've got every
important
right
for
to do
people
that.
to know that.
You ever
I think
fired-
that's- but I think
I've
that's
never
Have
had
you
that
ever
question
fired a
asked.
financial advisor in the middle of a podcast?
Well, and I guess I'm still
Can we
trying
make this happen?
I'm trying to get to these people who are, probably our target, who are not surrounded by a bunch of people who know what they're talking about.
Right.
Right. So like that is a concern.
Yeah.
I would think. Right. Would be like if I get into something, how hard is it to get out?
Yeah.
Because they're already
it's a
worried
great-
about the amount of money that they're giving out.
And I
You know
think
what
it's-
and they're not thinking about the future yet because they're living in the now.
Yeah.
They're living with the constraints of what my income in and my expenses out are.
Right.
And I'm definitely going to take care of the future because I'm trying to do the best for me and for my current and potential employees. But if I'm going to do that,
Yeah.
I need to know the ins and the outs. And
Yeah.
I think most people don't know.
I think it's worth asking questions when you meet with these people too of what licenses do you hold? What do you specialize in? You know, some people only have licenses to be able to do life insurance and variable annuities. Some people can only do fixed annuities. Some people have the full gamut, you know, like I do, or some people might be very much beholden to, I work for a company, I can realistically only sell you this company's stuff. Or are you fully independent? Like I'm very fortunate, I work for a company where we're independent. We can shop for any financial product, any insurance product for our clients. I don't have limitations on that, and that's a huge advantage to me from where I was before, where it was like you're literally being told you're captive. You have to sell our stuff. And listen, and there's no right or wrong. You know, if you work for Merrill Lynch and you're doing Merrill Lynch things, there's nothing wrong with that. Morgan Stanley, these are all great companies, but I think it's worth having that conversation with the potential advisor of what are your qualifications? You know, are you a fiduciary? Do you have to work in my best interest legally, or do you just say that you're going to? That's a biggie too.
I think you're also, to give you, you know, some credit here.
You were just trying to fire me.
I know. You're hired.
I just got fired.
You're also a phenomenal resource, I feel, for business owners with the combination of skill set, because I feel like we talk about this all the time. The real estate piece of business ownership is a game changer, and I always try to push clients into that direction.
Yeah.
With your dual certification as a skilled financial advisor and a commercial real estate advisor and broker, like that, to me, those two things are phenomenal to have together.
Tell me more.
Well, I value them. I value them because I am frequently looking at how to leverage commercial real estate transaction in business development, because the last point you brought up, the end at, you know, having a goal for like exit strategy. Real estate is a big piece of exit strategy in my mind. So
I'm a huge fan of people that own hard assets. I think that's wildly
I
important.
have a very hard asset.
Oh boy, we've just gone off the rails. Can I be fired again?
Were we ever on?
That's a good point. Well, since we're jumping ahead to the exit strategy part of it, thank you. I'm just going to bring the train back on the tracks. You guys are business partners. I'm sure you've met Brian's wife before, right, Patrick?
Yeah.
Okay. If Brian hadn't woken up this morning, he's no longer with us, would you want his wife to be your new business partner for Blunt Force Business?
Probably not.
Okay. So do you, and this, you don't have to answer this, but like that's why buy-sell agreements are really important in partnerships, because in a legal sense, if they are legally married, and I believe you are, he dies, she's now your partner. And you guys are now, whatever your agreement, let's say it's 50-50, Brian and Patrick. Well, now it's 50-50 with Brian's wife and Patrick. And I think a lot of people don't think about that. And it might be 3 guys opening up a bar together. It could be whatever it is. Having that conversation, it's one of the easier things to put into place is a buy-sell agreement. You do it with life insurance. You do it with a very simple 1-page legal document, and it can be a game changer.
Yeah.
You know, that's a really big thing. And so that's part of the exit strategy of like, hey, what if one of us gets to a point we don't want to work together anymore? Mm-hmm. How do we got to talk about that now.
Yeah.
What if we're not friends?
It's almost like it's like a prenup, right?
Yeah.
Sort of, yeah. It's a good way of looking at it.
Smart.
Yeah. Yeah. And, is it a family business? Do you want to pass it down to your heirs? Do you, have you done legacy planning? And I know that might sound ridiculous to do on day one, but it's helpful to be like, hey, I have aspirations of this is my goal. I want to get this going.
What percentage of businesses make money out of the gate and then something goes wrong?
Yeah.
Probably it's not zero. Right. So it's like there's probably a lot of that situation where it's like, hey, we made some money, but we didn't realize how hard it was going to be to work together. Now what?
Well, also, how much of a problem is it if you do have that conversation? It spurs the conversation with the other person, like, hey, what do you want to get out of this? Like, where do you see this in 10 years?
Yep.
Because that's the conversation that often doesn't happen. That leads to the problem at year 5 or 10 is that the two people saw different trajectories there.
Yeah.
And
Yeah,
now,
for sure.
now what? Right
Yeah.
now, like you didn't see this going this way. You didn't see this going this way. And now we're pulling in
Yep.
different directions, and we didn't iron that out because we were like, just get it, we'll get
Right.
it started. And that happens all the time.
Yeah.
Yes, that is free, and
Thinking
that's
of your
great.
cup right here. Family members all working together, right?
Absolutely.
Yeah.
Way to promote Rachel's table.
See, look at that.
Friend of the pod.
Friend of the pod. Adam's been on the pod.
Nice.
Yeah. But I mean, it was a perfect example, actually. Perfect
Thank you.
example. Like all those family members had to figure it out. Like,
Yeah.
what happens if, and what does
They
that
had
mean?
really great help getting the buy-sell agreement put together.
They had great advising.
Yeah.
Yeah. Yep. You are now officially a friend of the pod too.
How about that?
Friend of the pod, Brian Hoppe.
Which means
From
that
fired to back
Yes.
to being hired to
which
hard
means that
assets
Shannon,
to
Patrick, and I
in.
expect our Yeti within.
Oh, wonderful.
It's
Okay.
usually within 14 days of the
Yeah, that's fine.
appearance
I
that
can-
we
I'll
that normally guests
get
will
on that.
deliver the basket of goods
Right
which
now.
is usually a Yeti, coffee grinds to add back to our coffee, and I don't know, whatever else Patrick says he wants.
What else can we get into here so we can kind of get to the end of this in terms of what's something key about exit strategy that the financial advisor can help with? The buying someone was fantastic.
That was a great example.
Hey, if you have a plan, let's say you're thinking, all right, I want to do this for 5 years, but I don't want to do this forever. But you've got that in your mindset to begin with. All right, how about talking to a business broker early on in the process of what does it look like to sell this off? I want to get to a certain level of earnings. If and when I get there, I want to be able to sell this. Can you help with that? Business brokers are a huge resource. And I think they're just, again, sort of that cabinet of people to talk to early on, which may sound silly because you don't even know if you're going to get moving out of the gates, but at least having that in your head of where you can go, those are really important.
Let me ask you a question about, because we talk about frequently, the business just kind of goes on, right? The
Yeah.
business that you have no intention of ever exiting. And then the business, which probably there's not a lot of people, but probably more people need to think about, like, can I build something to take advantage of a market opportunity and then sell it, right?
Sure.
Which is something that probably not a lot of entrepreneurs, I mean, there's a lot of entrepreneurs who do it, but probably not many people who listen to what we're talking about. So it'd be nice for them to have that kind of idea in their head. Like, it doesn't have to be forever. Start a business, sell it, make some money,
Yeah.
find the next opportunity.
Sounds great.
But what about the person who, I'm trying to phrase this the right way, like maybe is exit strategy planning a good idea for somebody who has no intention of selling the business and just like the business plans on the business lasting forever?
I just
this
think it's
being like-
worth thinking about early on. That's all I'm saying. And, going back to the real estate part of it, maybe it's a matter of, hey, I'm starting out and I'm renting a space for whatever this business is. Maybe part of that exit strategy is, hey, what if I could buy it? Or what if I could buy a different location? Because then I don't have to sell the business per se, but maybe now I've got equity in a building. Maybe I just sell the building and then I keep running the business and things like, that's all part of that. Just having that longer term focus from day one, I think, is huge.
You're looking to me for a response to that?
No, I just think it's interesting. So my next thought was just, is there a value in having the exit strategy as like a contingency? So in other words, like, is there an exit
I mean,
in 3
my
years from
answer
now?
to this. So you're
I'm
throwing me the softball.
well, yeah, but I mean, like, it's the
Yeah,
point of this,
Barry
right?
Bonds this shit.
I want the expert to answer
Willie
too. I
Mae.
mean, like, and like, is that something people should do?
mean,
Exit strategy as a contingency.
I think as much as possible, you should build everything with what this needs to be at the end, and that really there's only to me, 3 options. Oh, maybe you could say 4. The one option is I'm just going to do it, and then when I'm done, I'm going to close the doors. Most people, it's funny, very few people, that's how they plan,
Right.
But it happens. And when that happens, you're like, oh, really could have probably planned that shit out a little better, right? Because there is value there, right? But it does happen. I've had clients that call me on the brokerage end, and there's a life event, and the life event is usually health related or the death of someone close to them.
Yep.
99% of the time. So health comes up or somebody dies.
Yeah.
And then they're like, I just got to get out. In every one of those cases,
There's no plan.
they exit for less than we should.
Yep.
Yeah.
Because they're
There
like,
was no
It's a
plan.
necessity.
Yeah.
Or the plan got thrown out the window
Right.
because of something
In this
that
ca- in
maybe
these-
wasn't planned for.
Right.
Exactly.
So,
but those things are, death and tax, right? So,
Right.
and we can include our health as part of death because
Yeah.
we could get sick. Something could happen and we can't, right? My
Or a
son's
business partner could get sick.
my son's soccer coach, all in, had this freak health thing come up. Hasn't been there for weeks. Right? I know it's a silly example, but it's not because at the end of the day, this guy was, this was his thing. And so what was the team's backup plan,
Yeah.
right? Yeah, they have an assistant. Great. That's the backup plan. Do we have an assistant, right?
Right.
So at the end of the day, it's that, right? It's we just get out or we close the door because the thing that happens is so traumatic that we can't even deal with the thing, right? Trying to liquidate it or do something. Forget it. I don't have it in me. I got to worry about this. Or the other one is we build it to sell. Mm-hmm.
which is sometimes the idea right up front.
Frequently.
Yeah.
Frequently that, that
I got a great
happens.
idea. I want to scale it and I want to get out.
Yep. Or we
Which
build,
I don't think is a lot of our audience.
It's probably not the majority of people to begin with.
Yeah.
They just have an idea and they want
But it
to
should
run with
be.
it.
I know, but like
It should be
I
there.
agree.
Like, I mean, at the
Or
end of
it
the
might
day,
be a passion project
What's the
they want to
idea?
run for the rest of their lives.
Well, we've
You
talked
never
about it
know.
a lot. I feel like a lot of people, more people are like, I'm passionate about this and I want to start a business.
Yeah.
Less people, and I think probably like they're probably very successful, right? These people, these serial entrepreneurs we talked about, where it's like, my passion is making money.
right.
Yeah.
So my passion
Sure.
is my family supporting myself.
Yeah.
Yep.
So what I'm going to do is I'm just going to find market opportunities and not
Yeah.
my passion.
Yeah.
Right? Your passion is
Yep.
a business. Market opportunities are a business.
Brilliant.
Find a
Yeah.
market opportunity.
Yeah.
So,
And then the last one,
go
the
ahead.
last one is that they look at like as a pass down. I'm building
legacy
this,
planning, yeah.
Legacy planning. I'm build this for my kid and hand it off to my kid. That's what happened here.
Yeah.
So this was a family operation that got passed down, and, which those are great. But the reason why we're seeing a lot on the brokerage side of
Yep.
our company is because I have family companies right now who the kids are like, yeah, I don't want to do that.
yeah.
So their plan
It's
happening
was
more and
a lot,
more
I
now.
think.
their plan was to hand it down. But they knew that. They saw
Yeah.
the writing on the wall. The
Yep.
kids went off in different directions. Like, I don't think this is gonna happen. So
Yeah, I
let's-
got a guy right now. He started the business with all intentions. The kids all worked at the company at some point, and they didn't. And now he's still doing it, and he doesn't want to be doing it.
Yeah.
Yeah.
If he doesn't do it, I feel like nobody will do it. And,
Right. I think the takeaway as we wrap this up is these three components are a necessity to really help maximize what you're trying to do in business.
Yeah.
And if we start from the idea of don't be afraid. Right?
Sure.
Don't be afraid. Get this on your radar. Plan for it, and then ease into it as it becomes more and more feasible. Right, but have these people involved in the planning. It's a great tool for not just your retirement, but also for employee retention
Yeah.
and getting them in the conversation for employee retention. And it's a phenomenal way to be thinking about the end at the beginning.
Yeah.
And
I agree.
And I think you've done a great job of kind of outlining that, talking us through it.
Well, thank you.
Any closing outline here? Any closing points here before we wrap up? Because I have one more question.
Yeah, so one thing I was going to say before that it'll come as no surprise. I like using real estate analogies when I talk about the financial piece. I like to tell people, when I start, whether it's a individual, a family, or a business owner, because I work with all of them, I'll use the house analogy that if you own a house and you were able to do a home inspection, where's the inspector spend half the time?
Basement.
In the basement. And he's doing that to make sure the foundation of the house is sound, right? So I do the same thing. The basement and the entry level is making sure you've got protection in place. So it's like, and not everybody needs these things, but like, is there life insurance? For a business owner, it might be a buy-sell agreement. Is there disability insurance? Do you have partners and you got to do a disability buyout in case somebody can't work? Is there a long-term care plan in place? That's the stuff it's not super fun to talk about, But I always say that's sort of make sure the foundation is sound, move up into the main part of the house. That's where you do investing. Now, that can be investing in the market for a brokerage account, can be long-term planning like retirement planning, can be college planning if you've got kids. That's where all of that fun stuff happens. And I always like to say, if you get up to the roof, you set up a nice little roof deck and you look at the sunset, and that's retirement. That's when you get to the final stage. But I've always liked that analogy because it sort of simplifies it for people where you say, hey, you've got to make sure the foundation is sound before you get anywhere. I think that's good for business owners.
Excellent. And my last question, I'm going to go back to an original point I made before, is what I'm I'm always concerned about is the person who is surrounded by, so like we're very fortunate. Like I've been in the entrepreneurial space for now, we're getting on almost 10 years, right? And so I have this network of people like, I meet Brian, through Brian, I meet you.
Yep.
If I wanted financial advice, be the first one to call.
Sure.
But what about for those kids, not necessarily all kids, but people who are just in a working class environment where everybody around them is a W-2. There's no entrepreneurial spirit anywhere. They decide they want to start a business. They hear our advice, find a financial person. Where can we start if we're starting from ground zero?
I mean, I said it before. I think you've got to lean on people that you know and trust that may have those people in their network. And if you don't, you've got to start networking yourself. Like, go find successful people. Go find other entrepreneurs and say, how'd you do this? How'd you get started? Do you have this cabinet of people in place? And it's often almost always getting out of your comfort zone. It's like, I don't know. I don't like networking. I'm a pretty outgoing person. I don't like doing it. I do it all the time. I feel like I have to. So I think that sometimes those people have to do that too. You want to own your own business and not be a W-2 employee for the rest of your life? Well, figure out how you're going to do it. Get out of your comfort zone and go meet people and find other successful people, maybe in that same industry, and say, hey, how'd you get started? People, ask Brian. People love talking about themselves.
I think we should wrap it up right there. We should wrap it up right there.
Am I fired again?
What's my favorite word?
Taking shots right on the way out.
I love you, Brian.
I love you too.
We spent a lot of time focusing on making money. Spend some time focusing on what you do with it. I'm Brian LaFauci.
Patrick Marino.
And this is Brian Hoffman. Till next time.
Thank you.
Thank you.